Hello everybody, today I'm going to answer the question, can you buy a house with bad credit? But I'm also going to give you the tips you need to make sure your credit isn't an issue through your home buying process. Hello everybody, Will Frazier here, realtor and credit guru, and my mission is to give you the information you need to overcome your credit obstacles of the past and turn your dream home into a reality. Now, if you want to stay on top of credit information and make sure that you're in tune with what you need to do to improve your credit for whatever the reason may be, then make sure you hit the subscribe button and turn notifications on so you can be notified of any new videos. So, can you buy a house with bad credit? The answer is actually yes. But the real question is, do you want to buy a house with bad credit? Now, I know you may be saying to yourself, yes, you do, because you may want to leave the apartment that you're at, or you may be staying with your parents until you get your stuff together so that you can go ahead and buy a home, or maybe you're renting a home and you're tired of paying somebody else's mortgage and you want to go ahead and get your own house. Either way it goes, you really want to think about if you want to try to go ahead and make that leap while your credit is still in a bad condition. But the truth is, the very best option that I can tell you on getting a home loan with bad credit is going to be an FHA loan, because FHA actually allows you to get a home with a credit score of 580 or better and still have a 3.5% down payment, which is very good. But if your credit score is lower than a 580, you're actually going to have to pay a 10% down payment. And don't be fooled, you're also going to have to pay extra money in interest because your interest rate is likely going to be higher because of your credit score. And there are also some other extra stipulations that you're probably going to have to go through with the lower credit score. But it is true, you can still get a mortgage with a low credit score. Now, there are some other things that's going to come into factor as well, which is going to be a debt to income ratio. So even if you get approved with the loan with your low credit score, you will still have to meet a debt to income ratio qualification, which is a percentage that you have to meet with your income compared to the debt that you have to pay out. Now, even if you get approved credit score wise with the low score, the debt and everything that may be accumulated on your credit report that is causing your score to be so low actually has to be included as a payment in your debt to income ratio. So any debt that you have from your credit can cause you to still get denied even though you got approved with the low score. Like I said, it can turn around and still affect your debt to income ratio and cause you to get denied. So I told you I was going to give you some tips that are going to keep you from having your credit stop you or mess you up in the process of buying a home. Now, I'm going to give you 4 tips that are going to help you out with that. Tip number 1 is going to be to get your credit reports. You need to get all 3 of your credit reports and scores. The scores so you can have a reference point to where you may be. The credit reports so that you can see what's on your credit report and you can see what you need to work on. Now, if you don't know where to get your credit reports, I know everyone knows of annualcreditreport.com, but for the process of getting a house, you're going to want to see your credit reports monthly, and you need to see all 3. So Credit Karma isn't going to cut it. Annualcreditreport.com isn't going to cut it. There are some other options out there, but I have a few linked down in the bottom in the description, so you can go to those to check and see about getting your credit reports so that you can try to look at them and see what you're going to need to work on. Now, tip number 2 is going to be you're going to want to get a credit card if you don't have one, because credit cards boost your score faster and they also give you more points than getting a loan or any other type of credit. So you want to get a credit card if you don't have one. If you already have credit cards, what you're going to want to do is you're going to want to pay down all of your balances on all of your credit cards to under 30% of the credit limit. Now, the reason why you're doing that is because 30% of your score is affected by credit card balances. So that's why getting them helps your score a lot, and paying them down can boost up your score a lot in a short period of time. Now, if you needed some options on secured credit cards to try to get approved to start this process, I have some of those linked down in the description as well. Okay, the third tip that you're going to need to pay attention to is when you're looking at your credit reports, you want to identify any third-party collection companies that you have on your credit report. And they wouldn't be the original creditor. They would be the original creditor handed it off to this company. So any third-party collection companies that you have, you don't want to pay them off. You want to get them removed from your credit report. Why? Because that's the only way that you're actually going to see improvement in your score. When you pay them off, it actually doesn't help your score. It'll either keep it the same or it'll drop your score. So how do you have them removed from your credit report? Well, you have to look at them to see if you have any obvious errors, and then you want to dispute those the right way. And the right way isn't online disputes. You want to mail letters when you send disputes. Now, you may have heard of people getting success from online disputes, but I promise you it only happens for a few people. It's not very successful for everybody. Now, if you don't see success through the disputing method and you end up having to pay them, you want to do a pay for deletion where you offer to pay them a certain amount of money only if they remove it from your credit report. Now, you want to negotiate this before you give them any money, because once you give them money, you have no leverage at all. So you want to make sure that you negotiate a pay for delete strategy when you're trying to get those accounts removed from your credit report, because like I said, that's the only way it's going to actually benefit your score. And now the fourth thing that you want to focus on is you want to pay off any charge-offs that you have. Charge-offs are the original creditors that you owed on your credit report. So you want to pay them off if they charged off within the last 24 months. Why? Because those are going to be the ones that are still affecting your score. So when you pay them, you will see a decrease in your score, but it won't be as drastic as an older one. And either way it goes, you can't have a certain dollar amount of debt on your credit report for most lenders. So you have to pay off some of those debts in order to make sure that you still qualify. And the amount is normally, I would say, about $2,000. So you can't have $2,000 worth of bad debt on your credit report. That would be between charge-offs and collection accounts. So, you want to pay down at least enough to get you under that number. And if you're already, under that number, then you're good. Now, if you've heard of any other ways of getting a home with a low credit score, I want you to leave those comments in the comment section. And also, if you enjoyed this video, I want to thank you for sticking around, and I want you to like the video, share it, and make sure you subscribe to the channel so you can get more useful information like this.